Students, welcome back to another class of Income Tax, Law and Practice with me, Adela Samuel, Head Department of Accounting and Finance, St. Anne's Arts and Science College. So in today's class, we are going to see certain important terms under the concept of income tax. So let's start off with the important terms in income tax. The first concept that we are going to see is assessment year. The first important concept you need to remember is the assessment year. What is this assessment year? Assessment year is the year in which the income earned in the previous year is going to be assessed. So if you take a particular person, whatever income he earns in the previous year will be assessed in this year. So in our context, our assessment year is going to be 2020-2021. So this you have to remember throughout this subject. So our assessment year is going to be 2020-21. The second concept is previous year. What is this previous year? It is the year in which the income is earned by an individual. So the year in which you are earning the income is called the previous year. So in our context, the previous year is 2019-20. So a person who has earned money in 2019-20 is going to be assessed in the assessment year 2020-21. These are the first two concepts you need to remember carefully. So the third concept that we are going to see is assessment. What is assessment? Assessment is the procedure by which the income of an assessee is determined by the assessing officer. So the procedure or the process through which an assessing officer is going to assess the income that is earned by an individual. That process or that procedure is what is called as assessment. So this assessment can either be a normal assessment where he is going to check the income of an individual, or it can also be a reassessment, going through the assessment process again if there is any mistake or any fault that has been committed. So the third concept is the assessment. The fourth concept that we are going to see is assessee. Who is an assessee? An assessee is a person by whom any tax or any sum of money is going to be payable under the Income Tax Act. So any person who has to pay income tax, he is considered as an assessee. So there are three types of assessees that we're going to see. The first one is an ordinary assessee. Who is this ordinary assessee? A person who has to pay an amount under the Income Tax Act. So any individual who earns money and he has to pay income tax, then he is called an ordinary assessee. It can also be a person who files return of losses, not just income. Any person who files return of losses can be an assessee. And any person who is entitled to get back a refund from the income tax authorities, he can also be considered as an ordinary assessee. The second type is a deemed assessee, or it is otherwise called a representative assessee. In certain cases, a person is liable not only for his own income, but he is also liable for the income or loss of another person. Then it is treated as a deemed or an representative assessee. So for example, if a minor child is earning an income, the income tax will be paid by his parents. So then in that case, the parents become the deemed assessee for the minor. Or if there is a person who is deceased, or deceased in the sense he has died, but he has earned an income, still his income will be taxed for that particular year. In that case, his legal heirs will have to pay the tax. So then the legal heirs will become the deemed assessee or representative assessee. So any person who represents another assessee and pays the tax, he is called as a deemed assessee. The third type under the assessee is assessee in default. So if a person fails to fulfill his statutory obligation or his responsibility of paying the income tax, then in that case he is called an assessee in default. So if you suppose you earn an income but you don't pay your tax, then in that case that person is treated as an assessee in default. Sometimes the employer, the person who is giving salary, when he is giving salary to his employees, he might deduct some amount as tax deducted at source. So he collects this tax amount from his employees and he has to pay it to the treasury of the government. But if he doesn't do so, then in that case the employer will become an assessee in default. So the three types of assessees are ordinary assessee, deemed assessee and assessee in default. These are the third and the fourth concepts that you need to remember. So the fifth concept we are going to see now is person. Person under the concept of income tax. So a person, when you take a person, the term includes different concepts. So we are going to see different concepts under income tax who is a person. The first concept is referred to as an individual. Who is this individual? It refers to a natural person, a human being. An individual may be a male or a female. He can be a minor or a major. So any person, a natural human being, is considered as a person under income tax rule. The second type of person is the HUF. HUF or Hindu undivided family. Hindu undivided family. So it is a relationship that is created due to the operation of a Hindu law. So the head of this HUF is called a Karta and the members of HUF are called co-partners. So under income tax rule, HUF is also called as a person. So an individual or a HUF is a person. The third concept under income tax person is a firm. A firm, otherwise we call it as a partnership firm. What is this? It is an entity which comes into existence as a result of a partnership agreement. The persons who have agreed to share their profits and losses of a business, and the people who come together, they are called as the partners, and collectively together they are called as the firm. So a firm also is considered as a person under income tax rule. The fourth type of a person is a company. Company. It is an artificial person registered under the registered under the Indian Companies Act of 1956. The features are perpetual succession, a common seal, and shares which with limited liabilities. So a company is also considered as a person from a income tax point of view. Then we have BOI or body of individuals or AOP, association of persons. So what is this? This is like when persons come together to carry on some kind of a business or an activity with an objective to earn an income, and where natural human beings are coming together as members, they are called as body of individual. Otherwise, they are called as association of persons. So this kind of a system is also considered as a person from income tax point of view. Then the sixth concept is local authority. Local authority is nothing but the municipality or the panchayat or the cantonment board or port trust of any city. So they are also called as the local authorities. These are the government, semi-government authorities where they are also considered as person from income tax point of view. So from income tax point of view, when we consider, there are 6 different kinds of concepts that we consider under the concept of a person. A normal individual, a HUF, Hindu undivided family, a firm, partnership firm, a company, a BOI or a AOP, as well as the local authority is considered as a person under Income Tax Act. The 6th concept that we are going to study about is the gross total income. Gross total income, otherwise referred to as the GTI. This means the total of incomes computed under the 5 heads, namely income from salary, income from house property, income from capital gain, income from business and profession, and income from other sources. So the total income that any individual is earning out of all these 5 heads, we consider it as the gross total income. Gross total income can also be called as the income that any person receives minus any losses that he has occurred in that particular year. Minus that will give you the gross total income. The next concept is exempted income. Exempted income. So what is this? Those incomes on which income tax is not charged. Then in that case, we consider it as an exempted income. So exempted income can be based on a few different facts like number 1, it can be because of the nature of the income. Depending on what kind of an income it is, it can be exempted from tax. That is 1. The second one is it can be either because of the status of the assessee. Depending on what kind of a status the assessee holds, depending on that, some kind of an income can be exempted from tax. Third thing can be source from which the income is derived. Depending on the source from where the income is gained, then that also can be considered as an exempted income. So 3 things we are seeing under exempted income. 1, it can be because of the nature of the income. It can be because of the status of the assessee, and the third one, it can be the source from which the income is derived. So these are the concepts under the term exempted income. So the 6th and the 7th concept are gross total income, the total income of a person, and the 7th concept is certain incomes that are exempted from tax. The 8th concept is agricultural income. Agricultural income is any rent or revenue that is received from the land situated in India which is used for agricultural purposes. So any rent that you get from a land which is used for agricultural purpose, we consider that as an agricultural income. Or it can also be any income derived from an agricultural land, any kind of an income that is derived from an agricultural land, or any kind of a building that is used for agricultural purpose, that can also be considered as an agricultural income. So together when we put it, we can say that any rent or revenue that is received from an agricultural land, number 1. Number 2 is any kind of an income from agricultural purposes, we consider it as agricultural income. And number 3, any building that earns an income which is used for agricultural purpose can also be called as agricultural income. The next concept that we are going to see is, 9th one, is Indian income. What is an Indian income? Indian income is an income that is earned in India. We can also say an income that is accrued and it is arising in India. Accrued means you are working in India and you are earning in India. Then that kind of an income is called as an Indian income. Another thing that they say about an Indian income is it is received or deemed to be received in India. So it is any income that you receive inside the Indian country, Indian borders, or we are going to receive it inside the Indian country, then it is called as an Indian income. Another concept that they say for Indian income is income may have been earned in a foreign country, but it is payable in India. That can also be called as an Indian income. In the sense, you have worked in a foreign country, but you will be receiving the money in India. Then that is also called as an Indian income. We can also say Indian income is earned or accrued in India, but it is received or payable outside India. That is also going to be considered as an Indian income, where you are earning the money in India, you're putting the work in India, but you are going to receive it outside the country, outside India. Then it is again going to be considered as an Indian income because you have worked in India. So these are the different concepts that you can say for Indian income. Next off, we have the concept of resident. Who is a resident? So under resident, we are going to see three types of residents. First one is an ordinary resident. Second one, not ordinary resident. Third one is non-resident. So as you know, what is the meaning of this term resident? It is a person who is living in a country. He is called as a resident. Any individual inside a country is called the resident of a country. So that is the meaning of the term resident. Now what do you mean by ordinary resident, not ordinary resident and non-resident? These are concepts that is part of income tax law. Okay, so first one we'll take ordinary resident. Who is an ordinary resident? An ordinary resident is a person who will satisfy any one of the basic conditions given by Income Tax Act and both the additional conditions given by the Act. So there are two types of conditions. One is basic condition and the second set is a additional condition. We will be dealing with that in the next set. So first we will see basic conditions and additional conditions. So any person who is going to satisfy any one of the basic condition and both the additional condition is going to be called as an ordinary resident. The second part is not ordinary resident. Not ordinary resident is a person who is going to satisfy any one of the basic conditions and any one of the additional condition or none of the additional condition. He is not going to satisfy both. Only if he satisfies both the conditions, he will become an ordinary resident. Because he is not able to satisfy both these additional conditions, he will become an not ordinary resident. The third type is non-resident. Non-resident is where this person is not able to satisfy any of the basic conditions and he will not satisfy any of the additional conditions also. So these are the three types of residents that is present. Okay, now these are the conditions and additional conditions for a ordinary resident. What are these conditions? There are two conditions. So first one is, it says he must be an Indian for a period of 182 days or more during the relevant previous year. That means he should have been inside India for a period of 182 days or more in the previous year. Our previous year, as we studied earlier, is 2019-20. So in the year 2019-20, he should have been inside India for 182 days. Or he must have been in India for a period of 365 days during the 4 previous years, and he must be in India for 60 days during the relevant previous year. So the second condition, basic condition, is this person should be in India for a period of 365 days. Inside India, he should have been in India for 365 days during the 4 previous years. 4 previous years means preceding the assessment year. For 4 years, he should have been inside India for 365 days. And he must be in India for 60 days during the relevant previous year. So in the previous year, that is 2019-20, he should have been inside India for at least 60 days. So if these two conditions are satisfied, either or condition, whether if he satisfies the first condition, he will become a resident, ordinary resident, or he can also satisfy the second condition. Either or condition, if he is satisfying, he will be an ordinary resident. The second part of this condition is the additional conditions. There are 2 additional conditions, and an ordinary resident has to fulfill both these conditions. The first condition, additional condition, is he should be a resident in India at least 2 out of 10 years immediately preceding the current previous year. 2 out of 10 years immediately preceding the current previous year, he should be a resident of the country. And he should also have stayed inside India for 730 days or more during the 7 years preceding the previous year. So inside India, he should be 730 days during the 7 years preceding the previous year. So if he is able to satisfy these 2 additional conditions, then he will become an ordinary resident. So either one of the basic condition, and both the additional conditions he has to fulfill in order to become a resident. The 12th important factor you need to know is the residential status. So as we studied earlier, under the concept of resident, there are 3 types of residents: ordinary resident, not ordinary resident, and non-residents. And we have also seen what are the basic conditions and additional conditions. So to have a residential status, if the individual fulfills any one condition and both the additional conditions, then he is an ordinary resident. If the individual fulfills any one condition and one or no additional conditions, then he will become a not ordinary resident. If the individual does not fulfill any condition at all or any additional condition at all, then he is going to be a non-resident. So these are the 3 types of residential status that is present under the Income Tax Act. So students, in today's class, we have learnt a few important meanings and definitions of certain terms that we are going to see under this subject, income tax. So I hope you have understood each and every concept clearly, because throughout this income tax subject, we will be dealing with all these concepts every now and then. So you need to understand them clearly, and we will be using them in all the topics that we will be learning from the next class. So please be thorough with all these concepts that we have learned today. We have learned around 12 concepts that you need to remember. In the next class, we will see how to use them. So I hope you liked this video. Please go through the notes that I'll be sending in the next class. Thank you.